And, you know, you're all all right, sorry, just moving things around. So let's see, Scott, how can I display 52-week high and low? Sure. So Scott, do you want to do that in a top list, or are you looking to do that in a yeah, top list? All right, so let's see, how do we want to do that? Let's go. I don't know if we have 52 weeks straight out on top list. We might have to do a custom for this. 1 second here. 52-week, yeah. All right, so I'll walk you through how we do this with a top list, all right? All right, so let's see if anybody that wants to follow along with this, all right, head to our home page. I'm going to bring over in just a second here. So head to the home page, copy, all right, just in case anybody needs. There, we'll throw that here. And head to the accounts management page, log in there, and we're going to head to custom formulas. All right. And as I always say, there's no special secret formula that I have in here. It's all me messing around and experimenting with things, or they're formulas that were given to me from people whose scans weren't working and trying to figure out what was wrong with them. So with all that said, we want to come to this help PDF. I'm going to open it in a new tab. All right. And we don't have 52-week data off in the servers outright for you to pull. So we have to add it. All right. So if we scroll down here, we're going to find 52-week high and 52-week low. So these are both just short codes. They're separated by a comma that's right here. All right. So we can copy that 52-week high. All right. And we can come back to the formula editor. We'll go to create new. We're going to put that in here. There's the source code description. We'll call it 52-week high. All right. Units is going to be in dollars. We'll save that and look to see what you have. Mine's going to be U23 because of where I am in the order of function for custom formulas. We'll save that. We'll come back to 52-week low. All right. Going to do the same thing. We're going to copy that. We'll come back to the formula editor. We want to go return to list. And we're going to create new again. Now we can see I'm at U24. And paste that, 52-week lows. Make sure when it pastes correctly. 52-week low, there we go. Units again is going to be dollars. We'll save that. And we can see that the code is accepted here as the original source. Now, just to experiment, if I do this here, all right, now watch, it's going to say error. That's how we know that it's no good. I added that little piece that screwed it up. We'll resave that the proper way. And that should take care of that. All right. Now that we've got that done, I'm just going to minimize that and bring over a menu bar here. Go to account, go to reset connection. All right. Then if we go to new and top list, I don't know if it's going to come if we type it or not. Yep, there it is right there. So 52-week high and 52-week low. And so, you know, I can either show the function. I can show the column if that's what I want to see. Now, if I'm trying to scan based on it, we'd have to create some kind of logic within that, to say we're above or below a percent of it or something like that. But this is a way for me to just show the column, is what we've done here. So back to search, 52-week high, 52-week low, show column. All right, if I press OK, we can see what the 52-week high and 52-week low is for any one of these here. All right. So it is a getting started webinar. The idea behind me doing these originally, Vivek, is that, we thought we'd have 50, 60, 70, 80, 90, 100 people show up to these, and I would do it more of a syllabus style of teaching. However, when it's, there's 4 people in here right now, and I felt it's a little better if we do it more as an open forum and let you folks drive the content instead of me, because everybody, I recognize some of these names that have been in here before. And so instead of me teaching the same 5 things over and over again, I figure I'd let you folks ask some questions and drive it in the direction that you want. But I'm always happy to go over the very basics of the entire software, of course. It was the original purpose of this, but like I said, been doing this for a couple of months now on Zoom. And, I've got, a few hundred people that sign up, and, 4 or 5 people show up. And so I figured it's best not to go over the same things over and over again. And don't get daunted by those custom formulas. Also, they're a great tool to have. You don't need any real coding experience with any of them. And it just allows you to access data within the system already and essentially create new formulas with that data. You can't, create a formula out of thin air. So for example, we don't have EMAs, so you can't go creating an EMA formula, but, you can create logic where you can say, one SMA that we have is greater than another SMA, or, we could set up what I just did with the 52 weeks to say, show me stocks that are 30% off their 52-week high, for example. Now, the basic stuff with the software that I go into anytime I do this is everything in the software lives in a few different places. Number one, you've got the toolbar up here, the menu bar, I like to call it. All right. This guy up here. All right. And with that, all right, we can find all these different functions. And as you go along, they'll become more context of what load from the cloud means, coming to new, we can create a new alert window and start a new alert window or top list. Multi-strategy windows, so on and so forth, charts and price alerts, so on and so forth. There's all kinds of different things in here. I think, as you go along, you'll use and come to know these functions a lot more. Obviously, the newer you are, the less apt you are to explore some of those things while you're just trying to get a hold of scanning. The software itself is built with tons of pre-use scanners, so I'm not sure, what your level is. If today's your first day with Trade Ideas or today's your first week with Trade Ideas. So, let me know if there's some specific things you want. But so that's, the first place I send someone is, take a look at what's in the menu bar up here. All right. There's all kinds of things. Some of it's explanatory. Some of it is not explanatory. Also, on the help part of the user bar, we have our user's guide. So if you click that, you're going to get a link to our user's guide that's right here. All right. And it goes over a lot of different items that are in here. And again, I know context matters. So some of the things that are in here won't make sense on days 1 and 2. And then all of a sudden on days 3, 4, and 5, after playing around with the software, attending a few different Q&A sessions, maybe hanging out in the trader's room, the context starts to come and these things start to make more sense. And you'll get into some of the more advanced functions, obviously. But you can click on any one of these. A stands for alert window. And, alert windows are essentially a time-stamped window of alerts. So I'm going to bring an alert window up right here. All right. And what an alert window does is a two-fold function. If we come to configure, all right, and everything else. So like I said, everything in Trade Ideas lives in a couple of places. 1, we mentioned the menu bar up here. 2 is a right click. A right click gives you all these different options to change functions on whether it's a chart window, if it's a stock raise, if it's an alert window, if it's what we call this here is called a single stock window. So, don't be afraid, dive in, right click stuff. I think especially at the beginning, don't worry about messing up a layout or anything like that, because what you're scanning for today will be different than 2 or 3 days from now, which will be different than 3 weeks from now, which will be different in 3 months from now. You know, in 5 years of using the software, I've probably gone through hundreds of layouts before I've settled on what I'm currently using. And what I'm currently using is relatively new for me in the last 6 months or so, as I really took on a shine to the stock racing, for example. All right. So what I was trying to go back though is illustrate some differences in the scanning, because that's what we're here for. We're here to scan for ideas. We're idea generation. Some ideas are better than others. Some scans will be quote unquote better than others. But again, a lot of times these things are subjective. You know, saying what's the best scan is like walking into a restaurant and saying, what's the best food? You know, I can't tell you the bronzino is the best if you don't eat fish. And I can't tell you that the baby back ribs are great if you don't eat meat, you know, so on and so forth. So, but the idea behind scanning, and then from there, you take it how you want, / you can run into all the pre-built scans we have, is our alert windows indicated by this A in the top left corner. And again, if we right click and come to a configure, I can see what any scan is doing. Specifically in an alert window, we're going to have these tabs across here, right? We have the search tab where we can search for all these different data points to build scans from, all right? And their scans work for alert windows in a 2-function set. We have what we call alerts or an event, a new high, a new low, a new high filtered, all right? 25% pullback off the lows from the open, 25% pullback from the highs off the close. All right, these are all different events. They have to happen. Boom, this thing happened. Then we couple these events with what we call filters. All right, and the filters are indicated by these dual set of icons, this tealish and purplish color. They indicate minimum and maximum values of the filters. So we will settle upon some kind of alert or event, or we could start to build with the filters first. It's entirely up to any individual how they want to build the scan. And when building the scan, the filters will select those filters. And for example, we wanted to use, let's say, consecutive days, all right? I could select that and I can say, add that filter. Now it'll take me to the Windows specific filter tab that's here. And we can see the consecutive days is highlighted because that's what I just added. And I can give that a minimum and maximum value for scanning on. And we can see how those minimum maximum values will affect the scan with the show me function in the middle. So by simply putting something like a 2 here, we'd say show me stocks where the stock was up at least 2 days in a row, because we're looking at consecutive up candles on days, all right? Or for example, I could use a negative value on the max, and I could say show me stocks where it's down at least 2 days in a row, and so on and so forth. And so this becomes the basis of alert window building. And then the way the alert window will work is once you've settled upon the alert that you want from up here, you know, from all these different alerts that we offer. Anytime you select one, it'll bring you to the selected alerts window here. So for example, if I were to go with, I want to start with this blank here for you. All right. So if I were to select, for example, a Fibonacci 50% buy signal and add that alert, now it brings me to the selected alerts tab. Same concept as adding a filter to the scan where we add the filter and then we add a value. Well, here I add an alert and then I select the alert to say, hey, this is the alert, this is the event I want to happen. And when that happens, I want to make sure these filters are satisfied, you know, giving a scan of price range, a minimum amount of volume of shares traded, for example, a certain amount of volume over the last X amount of minutes, so on and so forth. You know, there's 500 different data points between the alerts and filters. So there's really no limit to the combinations that can be done. Generally speaking, the more filters you add to a scan, the less idea generation. The idea behind doing that will be to get more quality idea generation, but it doesn't always necessarily work like that. Loosening filters will mean that we allow more ideas to come in, essentially. So that's the basis of alert windows. That's one scanning type 1. And then we have what we call our top list, okay? So we can see the alert windows indicated by the A in the upper left corner, top list indicated by the T in the upper left corner. If we come into the configure of this is where the big difference comes in between these. In the search, notice how it's only filters. There's no alert. There's no event on a top list. So now we're just scanning for stocks based on filters, and that's it. And every 30 seconds, the list will return us all the stocks that meet our criteria, essentially saying, hey, these are all the stocks that now meet your criteria. And then 30 seconds, if something doesn't meet that criteria, it gets dropped from the list. And if something new meets the criteria, it gets added to the list. And that's really how that all works. All right. And again, you know, there's so many filters here. Some will work better with others than, you know, other combinations will. A lot of it starts to become trial and error. And I think one of the best ways to build scans is to ask yourself, what is it that I'm looking for? And then to start to build on that. So if you're someone who likes to find things that are oversold on RSI, look at RSI. Or if you want to find things that are breaking a Bollinger Band to the upside or downside, you know, you search Bollinger Bands. You know, these things are in here. You know, you can search them real quick like that by typing in the search terms. If it doesn't return you something, then it's something we most likely don't have. You know, so average, you know, if you wanted average true range, for example, you know, we've got that. There, you know, average true range, all right? Or if you wanted average directional index, for example, we have that, all right? So, and again, you know, I've okay, yeah, now I think I've got, I've enabled people's mics. So, you know, there's just 4 of you that are here on the Zoom side of things. And here, if anybody wants to join, I don't know how many people are in YouTube land right now, but if anybody is in YouTube land and you want to join, let me find a link for you. Copy link. If you're in YouTube land and you want to come to the Zoom side of things, by all means, there's a link for you. Head over in and we'll join you. Does the alerts send mobile notifications? Yeah, we can do mobile notifications. It's SMS. So essentially you'll create an alert window is what happens. And then you can attach it through the accounts management page for either email and or SMS alerts. I will give you a link to the set of instructions for doing so. Give me 1 second here. Just trying to navigate that in the user's guide. And again, you know, this user's guide is our friend. Trying to find the user's guide link. Sorry, give me a moment. Here we go. All right, so first I'm just going to drop the overall user's guide in here again for everybody. And again, I understand that some of these things won't have context, but it's like anything else when you first start to use it, it, you know, takes a moment to grab context. And once context comes, the rest comes with it. If we scroll down here, we're going to see email, SMS notifications, copy link address. I'm going to drop that in here now. So you have the user's guide overall and that specific item that you were asking for. It is a limited function. We are working on some mobile stuff, but if we come here, all right, we can just peruse over this together really quick. And so here we talk about being able to receive the SMS and emails. And once it's configured, the email or SMS, when your strategy triggers, the service, however, is not intended as a replacement for the main product and is currently in a beta, all right? Works well with strategies, very limited number of alerts. Email or SMS contain at most 10 stock symbols. So you'll typically not get more than 3 messages per hour, all right? And in here we go into how it's all configured essentially, all right? If we come to, let me see if I can mess around with it here. I've never really done much on this stuff, but all right, so here on the accounts management page, if I come to email and text messaging, essentially what I'm going to do is I'm going to take, let's say I have this alert window. I want the emails from that. All right. I would come to collaborate. All right. I'm going to highlight this. So again, sure, went a little fast on that. You can right click, go to collaborate, right click, copy, and you can place that in here. All right. And now you've got that here. All right. And you're going to set up and you're going to update the strategies. You're going to give the email address here. All right. We're going to update the strategies. All right. And all that here. And then you put the check mark to enable it. And if alert comes through, you're going to get that email. There are different codes that you might want to go over in here. All right. For what this all means. Also, you'll have to check with your service provider that SMS messaging isn't enabled. Sometimes there are people who they have a service provider that doesn't outright allow the SMS messaging. So you have to double check with them to make sure that you have permissions on for that. I don't think there's usually any extra charge to enable any of those things. I think it's just about them allowing the permissions for it. Obviously, the charges will depend on whatever your rates normally are for your provider. So that covers that. Let's see. All right, I think that's it so far on any of the questions that are here. Get rid of these items here, get rid of that. And we can see here from my compare count windows that the market is back to selling off. I don't even need to pull up a chart of the SPY or the Qs or anything like that, or the IWM especially. I mean, I can see the spike here, new highs versus new lows, what's going on. Clear as day, but just for fun, this is what I like to do, just to test things. Let's take a look here at SPY. Oop, SPY. Drawings here. So yep, there we can see the SPY is selling back off after that brief rally. We're back below 400 on it. I think you're going to hear a lot of talk about pre-pandemic highs coming up. I'm sure some people are already saying it. I think we're headed into the 380s, 370s based on this head and shoulders pattern that we saw. And it's, really playing out now. For those that aren't familiar, this is what a head and shoulders looks like. There's a shoulder, here's a head, here's a shoulder. We can also call this a complex shoulder, almost like a double shoulder. And the way we generally measure is target is going to be top of the head to the neckline. We can call this about the neckline, give or take. And so that distance to that distance or so, give or take, and that puts us down here around 370-ish or so. For target, I think it's very reasonable given the environment, given what the charts are doing. We can see that play out on the Qs as well. We've got fractal patterns that are happening. And fractal means different charts, different time frames, essentially. I think it becomes kind of clear. Always good when everything won't function the way I need it to. There we go. I think it becomes very clear what's going on here. This isn't rocket science. I think people overcomplicate these things. And I think very easily we can see this level on the Qs very quickly, as a matter of fact, very, very quickly. I will say this, if nothing else, having a look at some of these charts that are in the NASDAQ, all right, that have really, bubbles that have really popped. I think there's a lot of damage that's been done already. Everybody talking about these huge bubbles and the bubbles are going to pop and wait till they pop. Well, I mean, this thing was at 400. It's trading at around $30 now in 6 months, 7 months. I mean, how much more do you want that bubble to pop? All right. And again, we were up around 700. We're now at, $1.70, $1.75, whatever it is. All right. 175, not $1.75, but all right. Again, how much more do you want that bubble to pop? I mean, and I can keep going on. This is Carvana, right? What's Carvana? I can't remember. Where the hell is Carvana? Sorry, having trouble remembering stock symbols. CVNA. Here's another one for you. All right. Up around, 370 or so, we're down to $36. All right. So the bubble's popped. It's just how many more portions of this bubble have to pop? I mean, Peloton, another ridiculous chart. Who else? DraftKings. Here's another ridiculous one. All right. The bubble popped. All right. I mean, this thing is up, it was up around 70 and change. Now it's down here at 11. All right. The hits just keep on coming. SoFi, another one. All right. So the bubble's popped, but there's other parts of this bubble that need to continue to deflate. And I think, the averages are now only beginning to reflect what the underlying market was telling us since really February of last year when you looked at market breadth and things like that. So that's just, market snapshot and market overview, some stuff that I was looking at today personally, some thoughts that I've had personally on the overall market. Not really a whole lot to do with trade ideas scanning necessarily, other than we could say that we want to scan for ideas that are either short-lived bounces, or we want to scan for ideas of stocks that are continuing to break down, or stocks that have made a move up and look like it's more of a relief rally to short than an actual trend change, because the trend change is not going to be likely for a lot of things at this point as we get into a more and more bearish tape. So again, if someone has specific questions on the software, fire those away for me, of course. Otherwise, I'm just going to kind of market thoughts and scanning thoughts as we go along here. Let's see, get this menu bar back. And just want to load a scan here. Let's see if I can find this. All right, so I, created this parabolic scan with you folks a couple of weeks ago, I guess now, and it's turned out to be a lot of requests to have it after I created it. I just talked about it briefly on Twitter. It was last week or the week before, and a ton of people started asking me for it. So I've kept it around. Normally I delete scans I don't use, but this might be something worthwhile looking at for those that are looking to play and fade some of these pops on the short side. All right. We can see, let's see. So APPN, we see that thing flying through a ton here. All right. Not a good short play. That kept moving up. And this has definitely found stuff both long and short side. So let's see here. AHCO. So we could have had a nice short off of that here. And we could have played it from both sides, really, because it caught it towards the top here. All right. Could have been a nice short play that side. Once these moving averages caught up to it, cradled it on that 15-minute chart. Now it doesn't look as nice on a 5-minute chart with those moving averages. And that's why, again, moving averages become subject to who we are and what we are trying to trade. Oh, absolutely. I can give some intro into Holley. Absolutely. All right. So I would say this first. Let's bring back that menu bar. All right. For those that want to load Holley and that can load Holley, I would say come to new and go to Holley, AI Holley strategy trades window. Don't do the strategy window. The strategy window is just going to tell you the strategy she came to the day with, not the actual trade she made or the alerts. I don't like to call it trades. It's still alerts. They're still idea generation. But you come to this, and when you click open, it's going to give you a window that looks like this. All right. Now there's a lot of data in here, and I always suggest to people, especially starting off, let's narrow the data down. And that's why you'll see why I have it the way that I have. When I right click and I go to columns, all right, this is everything data wise we can display. This side is everything I have displayed. And you can see there's a lot that I'm not displaying because I don't need all these things. I don't need time to exit. I don't let Holley manage my trades. I want to control it. I think it's human and machine together, not to let the machine do everything for you, or we end up like Skynet on Terminator. No, I'm kidding. But in all seriousness, there's not a trading bot out there that can do better completely on its own than it can do with some human interaction, because we can see things unfold differently in real time than the AI can. And one of those reasons being is that as it stands now, the way logic works on this for her putting out exits is their bracket order essentially attached with the alert order that came through those exits, and they can't adjust on the fly, because we made this in the sense of if it was to go as a bracket order to the broker can't adjust these orders on the fly. All right, these stops and the other exit parameters, because there's not just stops involved. We have what we call a reduced risk for an exit. We have what we call profit save for an exit. Essentially, these things mean they're trailing stops. All right. Profit save is a trailing stop, meaning, I'm up in the trade. I'm not going to let it turn to a loser, things of that nature. One of the other things to note is, the exit reasons, and the risk modes. So let's start with risk modes. We have what we call conservative mode for Holley, all right, a moderate mode, and aggressive. I would prefer it if everybody forgot about aggressive. I just don't think there's anything to look at there. Aggressive means we're trading without a stop. It means we entered the trade and we're just going to hold it till the end of the day, no matter what. And that's the same thing as going to the casino and gambling. That's not trading. Trading is about risk management. No stop means you have no risk management. You're not managing your risk. Moderate, all right, which is my preferred mode for the AI to take a look at in general, means that we look at the entry signal, and the only two things that will get us out of that trade are a stop hit or a close on sell on close order for the end of the day. Okay. And those are the only two things that take you out of a trade with moderate, and how it's calculated here. And then we have conservative. Okay. And what conservative does is has the first exits we talked about. We can have a sell on close. That's possible for conservative exit. We can have a stop. That's possible for an exit. Then we can have, as we see here, what we call profit save. So again, we took the signal. It starts to reverse. We're not going to let a winner turn into a loser. We exit, very similar to a trailing stop. And then we have what we call a reduced risk, meaning this trade isn't working. Okay. And instead of sticking around for the stop, and I'm not illustrating the stops here because I don't like those indicators, but let me show here. All right. Instead of sticking around for the stop that's down here, because we can see this is the stop price that Holley put in for us for risk management, we're going to exit it. Now, it turns out that was a bad call by the algorithm, essentially, was that reduced risk, because it came down here, got sideways, all right? And we can see this darker shade indicates where we were in conservative mode in the trade, where the lighter shade shows moderate with the conservative, okay? And we can see that we, ended up catching wind, and trade ended up working out in moderate mode. That's why I think human and machine is the best, all right? Now, for someone like me, all right, I see something that gaps up like this, I'm certainly not chasing it, all right? Looking left, which is what I do when I look at any kind of trading, I also would have noticed that this seemed to be an area of interest right here, price action. And I wouldn't have thought, I would have thought that if we struggle around this area, I might not want to get into this trade here, all right? And in fact, that's what happened, all right? But I could have set a price alert, all right? And I could have watched that price alert and continued to lower it and monitored it as a trader myself, saying, all right, Holley saw something here. Is she late? Is she early? Is she on time? I don't know, but I'm not going to rush because I have my own trading plan to implement. She's given me a signal, all right? Let's see how quality the signal is now, all right? And on my intraday trading, I like an 8 EMA and a 20 SMA. I let those guide a lot of what I do. And I would have noticed, watching her as a watch list, essentially, that, all right, well, we started to catch wind on this 8 EMA, all right, after this gap up. We never filled the gap all the way, so it didn't become what we call an exhaustion gap as a technical analysis, or a technical analyst, all right? And now we're starting to catch it here, all right? And that ends up being a decent signal in the wind of a tough day here for the long side, to be honest. And so that's how you apply being a trader and the statistical probability of Holley, all right? Let me know if you have, a specific question as far as Holley goes, or if, what I'm doing is okay for you. As well, I want to share with you, I think, a great guide. This one here is a specific guide to just Holley. So all these links that I'm sharing, please, take these links and bookmark them and, go over them in your evening. You're winding down the evening, kids are in bed, or you're, just went for your evening walk, you're coming back, you've cleared your head from, day's work or day's trading, and, go over these things. There's a lot to go over in all this, all right? But, this is the Holley guide that I just shared. And it goes into some really great detail about who Holley is, what she does. And a lot of it, I've just covered a number of things here, but there's so many different ways to look at and use Holley. So for example, one of the things that I do with Holley, I don't do it quite as much as I used to, but especially at the beginning of my early day trading, is I would say to myself, gee, Holley is making a lot of long alerts, all right? And let's say she keeps getting stopped out of these long alerts. I would say to myself, if I've got a long trade on or two, that isn't a Holley trade, gee, she keeps getting stopped out and I'm already up, but the market's starting to fade and maybe my position's fading. Maybe I need to take some off the table. So if I got 500 shares, for example, maybe I want to sell 250 shares, 300 shares and lock in some profit and move a stop up a little bit because, Holley's getting stopped a lot. Or vice versa, we could say, Holley is taking these short trades, and firing them and they're all working real well. So if I got short positions on, I want to monitor those in the sense of I want to keep a risk on type of attitude, meaning that, the shorts are working. Holley's working with the shorts. I'm working with the shorts. The market looks like it's going to, give me a little extra on this. So that might be a time where I can say, gee, the short position's already working. I'm in the money. It's consolidating. It looks like we could be good for another breakdown. Maybe I want to add to that winning position type of thing. These are things that come over time with trading. It's not something you can just jump right into. Rome wasn't built in a day. We learned to, first flip ourselves on our stomach from our backs before we even learned to crawl. And then, crawling turns to backpedaling, which turns into stumbling, walking, which then turns into, that funny little waddle that we do quickly as kids, so on and so forth. And so these are many ways that we can take different puzzle pieces of scanning with Holley especially and implement them into our strategies. And the beautiful thing about the puzzle we build as traders is we decide what pieces we want to put in there, what's relevant to us. So for example, I'm not someone, I don't trade very high price stocks. All right. So I don't want to scan for things like that when I'm building my own scanners. All right. And if I notice, Holley's all over the place with those types of things, it still gives me a breath of what's going on in the overall market, especially when, she's got a stock she's alerting at $1. She's got a stock that she's alerting at $90. She's got a stock at 13 and 10 and 40. And so we can see there's action all over the market right now as the AI is showing us as well. So all these different things that we can glean from Holley. So first off, there are never dumb questions. No such thing as a dumb question, but difference between long and short. Yeah. So, if you've never, look, 5 years ago before I traded, I had no idea what the difference between a long and a short is. Essentially, long means we're betting on the stock price to move up. Short means we're betting on the stock price to move down. When you short a stock, essentially what you're doing is you're borrowing shares from the broker. You're saying, hey, broker, just for an example, I'm going to use 90 as a number. Hey, broker, I'm going to bet on the stock price to fall. So I want to borrow shares at $90. All right. And so that means I'd be net negative shares. So let's say I shorted 100 shares. I'd be technically net negative 100 shares from the broker. I borrowed them from the broker. I don't own those shares. And as that price moves down, hopefully, because that's what I want to see if I'm shorting the stock. All right. As that price moves down, I have to decide, all right, I'm up $100, or I'm up $1,000, I'm up $1 million, I'm up $10, whatever it is. I have to decide, do I want to cover? And cover means I buy back the shares that I borrowed. So then I go to net zero shares again by covering. And that's what shorting, and that's the difference between shorting and long essentially is. That's like a very basic, synopsis of it. I've done not a ton of shorting. I've been doing a little more again lately, as that's the kind of market we've entered, with the market rolling over as much as it is. But shorting is a very, very different animal, as they say, than going long. With long, if I'm long a stock, I know essentially my stop, if I really screw up, is technically $0. That's all the money I can lose, which could still be a lot. When you short a stock, though, there is no limit to how high that can go. So if you're wrong betting as a short, so for example, to give you, just right on this chart, someone shorted the stock here, all right, and that thing kept moving like that, your loss is going to continue to rack up while that stock was moving up like that. And there's no limit to how high a stock can go. Technically, it could go for infinity. And so your loss can be infinite, or until you get liquidated by your broker, essentially. But, that starts to work into a whole different set of things. But my point being is that's why, I always caution people looking to get into shorting. If you're not someone who's ever shorted the market before, shorted a stock, whatever it is, whether it's an ETF, a single stock, an ENT, and any of these kinds of products that you can short, I would say go half or less than your normal position. So if you're someone who's usually share sizing 100 shares or 1,000 shares, go with 50 shares, go with 500 shares till you get used to it. It's a very different feel betting on the price falling versus betting on the price rising. There's a few different market mechanics that are involved with it. So, but excuse my pun, but that is the short and skinny of shorting. To what extent can we customize Holley strategies? For example, can we modify some of the configurations, customize stop loss? Nope. Holley's a black box like that. There's no customizing anything that's in here, unfortunately. The original strategies that were made were proprietary, then it's thrown in what we call a hopper, and they get optimized and back tested nightly. So for example, the nickelback strategy that was made, 6 years ago or whatever it was made at this point, is not the same nickelback strategy you see right here. There's been tweaks through it all throughout its history. The base of the strategy will always remain the same. So for example, if a strategy is looking at low price stocks, that's a filter that Holley will never really tweak, because then it doesn't have any point to it. So for example, there's a strategy called Mighty Mouse that looks at small price stocks, but the volume metrics in that might get tweaked. If there's a gap metric, that might get tweaked. If there's an average true range metric in it, that might get tweaked, so on and so forth. But she's a black box in that sense. However, what you do have access to if you have a premium subscription is you can back test and optimize strategies the same way that Holley does essentially. What we don't have access to at this time, and maybe sometime in the future we'll be able to push it out to users, is give access to the hopper that does the thousands of simulations that Holley does a night. Also for fun, as a preview into, now this isn't happening next week, next month, next quarter, but we're moving on some more machine learning type stuff. We brought in someone specifically for machine learning type of things. We're going to give more data to Holley than she's ever had before for her to feed and learn off of, to learn from her mistakes, essentially, better than what she already does now. It's our hope, it's my hope more than anybody else's, that in doing so, right now our backtest data goes about 64 days, market days back. The hope is that we'll be able to put in more market data than that 64 days. Because really, when you're backtesting strategies, having a couple of years worth of data is what's really ideal. Issue for us is server space. People grossly underestimate how much server space it takes just to show the new highs of every stock on a day. And then, that's just one alert, for example. So if we come into this configure, think about doing new highs for every stock on the day. Then think about adding new lows. Then think about the new ask and the new bid, and every other data point that exists within here. We're talking trillions and trillions and trillions of data points that exist. And so, it became, especially early on in the design of trade ideas, when server technology was not anywhere near what it is now, it was the happy medium between creating all these indicators and filters for strategy creation and having long-term data to look at. And so, now we've moved into a place where we have a lot of new server architect that's more cost efficient. That's why we lowered the price of our annual subscription so much. If anybody hadn't noticed that, we lowered the annual subscriptions on both the premium and the standard at the beginning of the year by a couple $100 each, actually. And then two, because the technology has become cheaper more readily for storage, database storage, we're going to start to look into increasing those storage capacities and adding new things. This isn't just flipping a switch on and off. I saw the work that went in just to, the last thing that we added was this float turnover filter. And this one filter created hundreds of millions of data points that have to be checked constantly that they're accurate. And so, I really got an appreciation for how hard what these guys do really is. So I'd like to know how to change a symbol in a single chart that is not linked to any other window. Yeah, easy. So Francisco, all you have to do is click on the chart, just give a click on it and start typing, and boom, you'll be able to see whatever it is that you want there. Would Holley ever have swing trade recommendations? Right now, We've curated swing recs, just wondering how Holley would look at swinging as well. Right now, there is no quote unquote recommendation through Holley swing trades. And we're really not in a swing trading environment at all at this point, to be honest. So it's hard to point you to something. What I would say is, though, treat Holley like any other scan in that regard and go through the alerts each day that she's had. And you can go through, you can right click and you can look at history. All right. And we can go with the time frame and we can show up to 3 months history in a clip. And we can go way back actually on Holley's history now. That's, so like I said, some of the stuff that's coming in. So for example, if let's call the most recent, let's go to November here. All right. And then let's go to September. So now technically we're going way back beyond the normal 3 months that you can back test on. But here we go. Now I'm going to show you all this stuff that Holley did from September 1st to November 1st. And so we've got all this information that's in here with Holley. Now, the way I have it sorted is going to show a lot of the green on the top, and then it'll get more red as we go down towards the losers down here. All right. But, you can go back and see how some of these winners maybe went on to multiple day holds before the market really rolled over. And you can go back further than what I just showed, and we can see, the date here, 9/1 to 2021 to 11/1 2021. And, I would implore you to take a look at some of these and do that like that. I'm trying to think of, I'm trying to think of stuff that Holley had that, went on to be some big time winners. So this was one that actually landed me a big win at the beginning of my trading with Holley. Let's go to a weekly chart to showcase it. And so I had first subscribed to Trade Ideas somewhere in here, all right? And then Holley had these alerts that happen in here. Now I'm on a weekly chart, all right? And I happen to, snag one of these ones in here and got not all that move. I got like 30% of that move, but it was still, as a beginning trader, it was an incredible thrill, to get this alert. And, at the time I was learning about charting and I was, trying to experiment with different things. And I thought, I liked this chart. It was a chart that was trending up and I thought I'd ride that trend. I ended up riding that trend. Now, in full disclosure, I had no risk management on this trade. I didn't put a stop in. I blindly bought it. It ends up working out. So, in hindsight, it was good and bad. Good in the sense that, I found a trend, I identified it, I found a trend scanning with Holley, I identified it, I rode that trend well. It was bad that I had no risk management, I didn't put a stop in, I had no real logic or reasoning for the trade itself. So glean from that what you will. What I'm trying to illustrate is that there are trades that work out like this. Now, this is, a really great case and a really great example of it. If you have 100 Holley trades, maybe 10 of them end up having a move like this, all right? And you're going to find them obviously more in bull markets than bear markets, because that's how trading works in general, but they exist. And so it becomes that human and machine part. Perhaps there was things going on under the hood with volume and ranges that, I don't know, that Holley was seeing though. And, and a trend, and Holley was able to obviously identify something here very early because this ran for a long time. Now, the flip side of it, she had some not so great calls on the other side of the same stock here on the other side of this mountain. All right. It just works like that. And that's why we have to, as traders, apply our own practices. Someone like me, I'm going to see her make an alert here. All right. Now, some of these might have worked out as day trades. I don't know, but they certainly didn't work out as swing trades. But me as a trader, I see this massive weekly candle that happens, and then she's going to make an alert. I don't want to run right and buy that. You know what I mean? That thing is falling. Well, I don't know why it's falling. For all I know, that they had terrible earnings or something like that at that point. And so it's, again, it becomes the puzzle, putting that whole thing together. Holley made this alert. We're in a good trend. There's a piece of the puzzle that I like. earnings aren't anywhere near it, all right, and it's still trending up. There's something that I like, all right. Maybe I know something about this company. Maybe there's some research behind it that I'm familiar with. Maybe it just has increasing levels of volume going on, and it's just showing, increasing interest in that stock. Maybe, as we scan through and we see that the insiders like it, and for reference, these are things that we can look at, especially with a single stock window. All right. So even though I'm not looking at a single stock window, anything that's in here that we can search for filters, I could put in a single stock window. And so I could see, perhaps I say, all right, Holley alerted this. And in my single stock window, it's not showing right now because I don't have it, but the insiders are buying into this thing, or, there's a big percent held by insiders and there's a large percent held by institutions. That might be something that is conducive to me wanting to ride this longer. And so I said, all right, as a day trade setup, it looked great. And maybe I took 500 shares and it moved up nice. And maybe I'm going to close out 300 of those shares, and things are setting up per swing trade parameters for me. And Holley looks good here that I'm going to hold on to some of those shares and let it ride as a swing trade with those last couple of 100 shares that I bought. So again, puzzles, all about puzzles and things like that. So, David, yeah, no naked shorts. No hope game, exactly. I have 2 alert windows. Is there a way to make my second alert window read off the alerts from the first alert window? No direct way to do that. Check. The only way that you could do that is, so let's say, for example, these 2 windows here, right? Let's say this was alert window 1 and this is alert window 2. I could create a symbols list that alert window 2 is attached to. So I can say, I can come to configure and I can go to symbols list and I can add existing list. And let's just say this test list was the list that I wanted to only look at. I can tell this one to only look at that list. And then I can highlight the stocks that I want from here, right click, go to send to symbols list and send it to test list. And so I can add the symbols quickly to that test list that this window is only looking at. That's the only way to do it. But there's no automated way to say, hey, this window only plays off of this window automatically like that. And then let's see, any way to see a sector info on a chart for a quick look instead of having to look at a separate single stock window profile? No, you're stuck with the single stock window. I'm sorry, there's no way for the chart to indicate a sector. What you see is what you get on here. You can look under profile, so you can have this up. So something, you could do is you can create a docked window with charts. So I can duplicate this into charts, for example. I can move this, like this here. And so I've got them next to each other. And so look, I got this on my 15-minute, I've got daily and a 15-minute chart on a single stock window. It's right here. There's really, not far that I have to travel eye-wise to get that. That's the closest that you can do for that there, Ken. Swing trading versus day trading. Day trading just means that I close out at the end of the day. I close my position at the end of the day. So I entered it today, I closed it today. Swing trading means that I held it into tomorrow. And then, from there, swing trading starts to become a little subjective in the sense that, at what point does it stop being a swing trade and an investment? Is 6 months a trade, a 6-month hold a trade or an investment? And, people will tell you, that's just going to be based on people's points of view, essentially. I don't think there's any hard and fast rule. I would say that at some point you have to say it's an investment. I don't think there's a 2-year trade, essentially. I think that becomes an investment at 2 years, maybe a year is where you could call it cut off more or less, but it still becomes a little bit subjective. Especially when you're talking about things like trend analysis and stuff like that, and saying, well, I got in on this trade and the trend has been up for a year. Why would I get out of it? And then, also things like, for example, I think a SPY chart's a good illustration of it just because it had a nice trend that just ended. So for example, looking at, looking at the SPY chart, one could glean from it and say, oh, well, here's the pandemic happens. And we move up and we say, all right, well, maybe we have a trend going on here. And when it takes out this high, we decide to ride this trend for 3 weeks. All right. And we got a little bit of a sell-off happening. And so we cut it here. And so, we entered here and we left here. And then we could see the trend continues and we entered here again. Perhaps we even held part of a core position here. We only sold half a position. And then we, this starts to fade again and we decide we want to get out here and it gets wobbling. We decide right now it doesn't look like there's anything to enter. And then a nice trend starts again and we still have part of a core position and we re-enter that core, add to that core position going through here. And look how long that trend lasted for, well over a year, and then we get wobbling. We decide to close the whole thing. Well, was this a trade? Was it an investment? I think different schools of thought are going to tell you different things, and no one will be right. That's like, that's like saying who's right about, what's the best, what's the best pizza or what's the best amusement park ride, things like that become subjective in that sense. So, but again, the core of the question, swing trade versus day trade. Day trade means I enter today, I close today. Swing trade means I enter today and I closed any day after today. So that's the short and skinny there. Let's see. Yeah, you're welcome, Ken. So, all right, we're at the 4:30 hour. Yeah, you got to check. And sorry, I wish there was a better way to automate those over because I actually, right now, my trading has become very different, especially in the last now 3 months with the market really starting to move down the way it has. But I went in the last big bull run that we had. I'm very big on symbols list. I'm very big on watch lists. Essentially, I like to curate my data, double curate my data. So, I go through a ton of scans every night, every morning. I mark up charts. I put them on short lists. When I say short lists, not shorting trades, but like, lists of short names, a short list of names essentially. And I run scans based on just those. But there's been no follow through on a lot of setups that I like normally. And so I've really moved to mostly day trading at this point. And that's, probably where I'm staying for now. So that's just kind of how that's all worked out at this point. So that's the short and skinny of that. So we're at 4:30. If I'll throw it out for any last minute questions here before I wrap up for the day. And again, I'm sorry, I know I got started a minute late here. Zoom was giving me a hard time with an authentication. I don't understand why it said my computer it didn't recognize, even though I've had this computer for 5 years. Technology, it's really something. Yeah, you got to also, this is what I'm here for. I'm very big into educating. Look, we have a lot of flashy stuff and trade ideas. That's wonderful. And it's great to show off the flash. It's great to show off the data. All of it means nothing if we're not educated. Someone helped teach me. I want to help teach other people. There's no magic scan that's going to give you all the answers, but what we can do is we can find quality idea generation and then take that idea generation and see how it fits into what we're trying to do with trading. There's no one way to find that idea generation, whether it's going to be through these races that I like to use for day trading, or if it's through the AI that, I also use for some day trading, or, I've tried to create, swing scans. I've had some stuff that has worked well in the past during the bull market runs. Unfortunately, we're just not in a bull market anymore. The bull market ended, and what was working before doesn't work now. We'll see if it works in the next bull market, and I'll make that adjustment when we get to that next bull market. Is that bull market in 3 months from now? Is it in 3 years from now? I have no idea. We had some bear markets that lasted several years in the 70s. Look what happened to technology stocks after the dot-com bubble. You had years before some of that stuff came back, years. But if you looked in other areas, you had amazing bull markets. Look at the cyclical bull market of energy. The big boom that happened in energy through the mid 2000s all the way up into the early 2000s or till the mid 2010s. Then that big energy boom stopped, and now it looks like we're back on it again. And so we identify trends, we scan for trends. That's what we do. We try to create those. We try to find those trends. So here, I've been very vocal about the XOP. All right. I'm a big believer in natural gas exploration. If I'm wrong, so be it. But I have defined risk levels that I'm looking at, don't let them get beyond that. I don't risk more money than I'm willing to lose. I never move my goalpost back when I have a stop in place. That is the end all be all. And that's how we manage risk. That's what trading really is managing risk. It's not about buying stocks. It's about managing risk. At what point in my trading career should I start considering using the software? I would say as you start to get a handle on some technical analysis, terminology, learn some of the easier ones and the basics, learn, what a simple moving average is, relative strength index, some things like that. I would really say spend some time on our YouTube channel, but, you can YouTube a lot of stuff in general, to be honest with you. And stick to the basics. Remember, if it sounds too good to be true, it always is. But there's a lot of great free education out there. I mean, first off, you just come here and hang out here, any day at 3:30. This YouTube channel that you're in right now, we open it every day at the gentleman Barry, who runs it as a trading room most of the day, opens at around 9 a.m. Eastern each day. Now, he's mostly talking about trading. He never tells people what to buy, sell, hold, or do, but he's talking about setups and things like that. And that's really where I learned a lot of the stuff that I know. I have no finance background whatsoever. I learned everything through attending the different webinars that Trade Ideas puts on for free, the free trading room. They talked about things. I wrote them down. Believe me, I asked questions, in the rooms, and, not Barry, but there would be people in the rooms that have been trading a long time that would be like, gee, how don't you know that? And it's like, well, gee, I didn't go to school for this stuff. Sorry, I'm not an expert, but I didn't let people get me down because I didn't understand anything. Everybody's got to start somewhere. I had to start from literally nothing. If you ask me, anything about, cooking in restaurants, I'm going to school most people on that stuff because I did that for 27 years. I've started to gain a knowledge here in trading and software. Do I know everything? By far not, no. But, I start to have an idea a little bit at least, and I want to share that. So here, let me, a couple things I want to show you real quick before I wrap up here. So give a shout out to Michael Noss. All right, here is, Michael, I'm going to share this link out. Michael puts out a ton of free content. He has a paid service as well. He works for Trade Ideas and all that stuff like that. But in this here, Michael puts out so much stuff, and he goes over indicators and how to use them all for free. All right. And he does live streams, all the time. All these different things in here. So come in, check out Michael's stuff, number one. All right. And this is not just for you, Hoss, but anybody that's listening. All right. Michael's a chartered market technician. I'm studying to be one now. So he really understands how to break these things down and get them as complicated or as simple as you want to get them. He goes over so many charts and patterns and charts. And this is the stuff that I learned from exactly what Michael does in these videos. It's all free. There's no tricks or trades to any of this stuff. The second thing that I'll point you at is on our education page. Sorry, let me just open an education page here. All right, so on our education page, the user's guide is going to be more focused around the software, so I wouldn't, get hung up on that. But everything I'm about to show you here is 100% free. Getting started, this is where you found the Zoom, this is where the Zoom is. All right. These lessons are going to be more based on software. All right. This is where we are on YouTube right now. All right. So it's free. You come in here, some stuff's going to go over your head at the beginning. Some stuff is going to make sense at the beginning, and as you go along, more stuff will make sense, like everything else. As you gain more knowledge, you gain more context, which means you gain more knowledge, that snowball effect of learning. The trading room is broadcast here and here. It's just that Barry gives up this side of the stream at noon Eastern for something similar to what we're doing now. And then at 3:30, I take over and Barry shuts down the room completely. Inside the trading room here, there's just a lot more trading talk that goes on. It's a little more inclusive, a little more technical on the speak that goes in there. But no one's ever going to say, oh, everybody just buy this stock or just do this with this stock or whatever. People are going to say, I'm looking at this stock based on this RSI or above this moving average, or, it's found this support level or this resistance level, so they'll say, it's retraced to S1, meaning support 1, or, it's bouncing off of R2, meaning resistance 2, and the numbers equal days going back, or the number could also equal other periods, an hour for the period, so on and so forth. But that's what goes on in the trading room. We've got these free webinars that are bi-weekly. What I mean by bi-weekly is 1 week is Monday, Wednesday. The next week is Tuesday, Thursdays. they're software based, but there's a lot of chart talk, a lot of indicator talk that goes on in these, go over scan building, and watching scans built and then what the scan's looking for also just helps you understand charting and how it all kind of starts to come together. I probably learned as much from these webinars from 2016 when I attended them nonstop till, sometime in 2020 when Trade Ideas offered me a position to work here. So really, really great place there to get a great education. And again, all free. Everything that I've just talked about is free. Then there's, a whole series of educational videos in here. And then this back to basics. This again is Michael Noss. He literally starts out, it's 36 part set of videos. All right. And he starts out literally, what is a stock? That's where we start at. All right. The most basic of basic, because nobody's born knowing what a stock is. It's just that simple. I wasn't born knowing what a stock is. Nobody that I'm talking to right now was born knowing what a stock is. So he literally starts at what is a stock and starts moving into charts and candlesticks and, all these things here. All right. All the way up into artificial intelligence. All right. And how far you want to take it and how much of a knowledge you want to have, that's every individual has, different speed and a different amount that they're wishing to learn. And that's that. And then of course, if you're into books, we've got a whole bunch of ebooks that are on, different trading styles and things of that nature, all free, download, 1, 2, 3, no problem. So you check all that out. So, that's all we have. I will say this, I discovered Trade Ideas at the April 1st of 2017. I'll never forget it, how I discovered them and all that, story for another time. But, I discovered them then. I just started attending the free traders room, the free webinars. Things like what I'm doing now did not exist then at all. This stuff didn't exist till, several years into me discovering trade ideas. And that's where I started. I knew nothing. I knew nothing about trading. I bought a few stocks in my 20s, and that was it. Just because I liked a few stocks, so I bought some Coke, I bought some Apple, some stuff like that back in 2005, 6, 7. Just had a Fidelity account. I was putting money in it, and I just said, I don't know what to do with this money and stock. And everybody says you should be in the stock market, so that's what I did. And there's a lot of lessons to be learned in there, of course. But my point being is that. I found Trade Ideas in April 2017. I did not become a Trade Ideas subscriber till almost the end of July that year. So all of April, all of May, all of June, and almost all of July. So we're talking 4 months. And, I was studying my tail off nonstop. I'd looking up everything I could, YouTube videos about candlestick charting and all these things like that. And then, I took a Trade Ideas test drive. We have one coming up. This, goes live Friday after the market closes and runs for almost the rest of May. I took that test drive and I didn't want to be a waiter anymore. I didn't want to manage restaurants anymore. And I said, I'm not going to fail at this. And, here I am. So, that's the short and skinny of that. So I'd say don't rush, Hoss, or anybody else that's listening in. All right. Trade Ideas scanning is going to be here. The market's going to be here. The free knowledge is going to increase. There's going to become more and more free knowledge for everybody over time. What won't be here is the people that start shilling out money too quickly for things, trading too quickly with live money and things like that. Those people are the ones that won't be here, unfortunately. And, that's just the reality of the situation. So with that said, I've gone over time. I have to run. I do appreciate everybody popping in here. Hopefully you all got a little something out of this. I'm going to stop the screen sharing here now. And I do hope, you will all be back. And I said, I hope that you folks, share Trade Ideas, share the free education with your cousin, your mother, your brother, your sister, your dog, your nephew, your cat, your cow, your groundhog, whatever, my purpose here is to educate people. That's what I'm here for. So thank you all. Hope to catch you all tomorrow. We'll just be on the YouTube side of things tomorrow. Thursday, we'll be back on Zoom and YouTube. Hopefully Zoom won't give me any trouble on Thursday like it did today, so we don't lose those first 30 minutes like we did. And we'll rock and roll from there, folks. All right. You all have a wonderful rest of your Tuesday. Enjoy the sunshine. Hopefully that you got around you. If not, if it's a rainy day, get a good book. And we'll catch you tomorrow. Take care.